Alright, so we're going to get started now. So, firstly, who here is in the mentorship and is not in the mentorship in day? Type in the chat, let me know. Because Day didn't really, he covered it for 1 second, but it was very hidden if you didn't pay attention. And previously, in the Telegram chat, I said something about PSPs being the vertex, something of that nature. Yes. So as you know, SMT kicks off every move, right? So let's just say, I could have drawn that a little bit better. There we go. So SMT kicks off moves, right? So let's say this low is in another quarter, this low is in the new quarter, sequential SMT, PSP, bang. You guys know that. Well, during this little sector of price action, let's say we're looking at, whoops. Say we're looking at normal sequential SMT across like the daily cycle, for example. This little sector of price action. So this would be a buy model. So a normal buy model is just whenever price spools up higher to one side, similar to what we're seeing now in the US markets. But during this little price action right here, you can spot a lower time frame of the exact same thing with a lot of entry confirmation. And if anybody remembers precision levels, that kind of ties into this. So and yes, I'll review this more in the future. But pretend this little highlighted area is just this on a lower time frame, right? So you have sequential SMT as normal, and then precision swing point right here. Within that precision swing point, you'll see something along the lines of this. If anybody can recognize what this looks like, and somebody already said it in the chat. If you have so this is an example right here. And I want you guys to, after this is over, go into your charts and just backtest this. Just see if you can find it. Just think about it. So for, say, I'll say it one more time. Say this is a daily SMT right here. And this highlighted area is a 15-minute precision swing point. Within that precision swing point, you'll have something that looks like this. And this would be a normal market maker model. And then down here, you'll have another precision swing point. So that is something for you guys to go into the charts yourselves and look for that, because I know a lot of people are struggling with where do I enter, how do I enter. This should aid a little bit of that. As soon as you know that, bring this down here. As soon as you know that the trend changes, you're looking for bullish PD arrays all through here to support your narrative, to target that opposing liquidity, which would be up here, on that buy model. Well, buy program. And you just bump it down one time frame. So, daily SMT, 15-minute PSP, drop down to a 5-minute chart, you'll see something that looks similar to this. And it's very consistent. So if you struggle with entries and you see the SMT and the PSP, but you're like, okay, where do I enter? Just drop down one time frame below the cycle you're looking at, and then you'll find all the entries in the world that you need inside of that small little range. This also ties into premium and discount. So there was a little cookie for the people that showed up. Can you repeat that one more time? Yeah. So say you have a normal cycle, sequential SMT that you're looking at. For example, like I just showed the daily cycle, you have your SMT, you see a 15-minute precision swing point. Once that PSP forms, instead of trying to buy at the lowest point or the highest point of the PSP, just drop down one time frame below the cycle you're looking at and look for PD arrays to support your entry. Could you show an example? Yes. What was that trade I took the other day? What day was that? Is it last week? Yeah, it was last week. And yes, for the person that was wondering, this can be classified as sequential SMT. So if we that's not important. So yes, if you look, so the close of this is what is important, remember? The closes of candles. So this is the lowest close of London session, this candle right here. Q3 will become, we wick into that, this can be classified as an SMT. This happened way back when, I think in March or April on the weekly cycle, and it was confirmed that this can be used as an SMT. Now, is this best case scenario? No. Can price react off of it? Yes. So as you can see, we have the SMT right here. And if we look at the Dow, we have, this would be our PSP, in this case a precision candle. So precision swing point or precision candle. I just call it TPD because combine the both of them, you get the same thing. If we drop down to the 15-minute chart, you see that formation. So market maker model, have that original consolidation. Phase 1, the smart money reversal. And then it was a little bit choppier. I got my entry in down here. But that original consolidation acted as a breaker. If you missed that out, there's a fair value gap here. That was not the best. So unless you got the breaker or the entry down here at the true order block, hint hint, nudge nudge, then you would have had a very nice run. So with what I just showed you, you can get an entry, you can get 1 to 2 entries, sometimes 3 if you're lucky. Yes, it is fractal. Partial SMT? Kind of. So that was the trade that I got on. If you guys keep up with my Twitter, that Friday, I'm pretty sure I posted it to the group as well, that is how I got that trade off. So that cracking correlation right there, 15-minute precision candle, drop down to the lower time frame, and then within there was this order block. And this is a true order block. True order block because it's a precision candle? Yes. And a couple other variables, but that's for you to explore. And then if anybody remembers what I tweeted out very recently, within a high probability order block, you will have an inversion fair value gap. And this is what you guys saw. Yeah, so this could technically, I wouldn't really say this is a breaker, just because it didn't. So a classic breaker is going to be higher high, lower low, and then expansion. So this would be your breaker. Vice versa if you're bearish. So yeah, a breaker has to take both sides of the market out for it to be classified as a true breaker. Unless you call it a mitigation block or whatever it is, but that's just, you start getting into too much nonsense. Best to keep it simple. Can you talk more about certain cycle SMTs for certain red folders? Ooh, that's a good one. So yes, this has been a theory for a while. And recently, if you've been keeping up with the quadrennial SMT that we've had, so literally perfect. So the US elections, it's held every 4 years. So it would be, and this is a very good example, I'm glad you brought this up. US elections are held every 4 years. the quadrennial cycle is held up of years. So it's 1 year, 2 year, 3 year, 4 year. And that's why I believe we saw this huge SMT that's going to continue rallying us up to take out these highs right here. So this is the target right here. If it keeps on going, really, if it gets to this high, which will definitely take a while, get out of that. So yeah, these highs definitely are gonna get hit. This high right here might take a little bit of time. We'll definitely see some conviction trying to get there, but as you can see, this move didn't kick off until the elections had hit. So a little bit before the election, so in September, that's whenever it kicked off, and we've been continuing there ever since. Same thing goes with CPI. Say, for example, we were looking at the monthly cycle, and this was a monthly SMT. CPI could follow through with its corresponding cycle. So I'll say so. As we know, the liquidity that is injected into the marketplace is spread out through the cycle. So if we take a look at the weekly cycle, yes, CPI is once a month, elections once in 4 years. Yes, that's why elections would be so depending on the news that comes out that week or month or year, whatever you're charting, you can anticipate a certain cycle sequential SMT to take place. So for example, if it's CPI or non-farm payroll, that only happens once a month. So your focus would be the monthly cycle and or the weekly cycle if you're looking for a two-stage. If it's just a regular 8:30 news event, like say unemployment claims, then you'll focus on the weekly and the daily cycle. Since the CPI has a lot more liquidity compared to just regular like unemployment claims, but elections have a ton more liquidity involved than just regular CPI or NFP. So if we were to draw it out, let's say this is oh god, that looks terrible. So for example, the elections quadrennial cycle made this huge move. If we look at this on a lower time frame, this is just going to be a huge move. CPI NFP, and these numbers are, I'll get a little bit more into it. These numbers, don't take these numbers to the heart. I'll give a better show of example. This is just to show the strength. So look at these percentages as strength of liquidity injection. CPI NFP, 50% liquidity injection, and 830 red news folder, like for example, we're just going to say unemployment claims, 25% liquidity injection. So if we have if we're looking at a cycle and say CPI usually falls on Tuesdays, sometimes Wednesdays, then the liquidity for the cycle, which you would be focusing on the weekly cycle in this scenario, would be like this. It'd be 10% Monday, and then like 60%, 60% Tuesday, and like 15%, 15%. Like just an example, or you could say 50, and then 20, 20. So 10% of the volatility is going to fall on Monday, 50% of the volatility would fall on CPI day, 20% of the volatility would fall on that Wednesday, and the rest would fall on the Thursday and the Friday. So you would expect the sequential SMT, whether it is the monthly or the weekly cycle, to take place on that quarter, which in this example, if we're looking at the weekly cycle, would be Tuesday, which would be the same day that CPI would land on. Since there's the most volatility in here, that's where most of your manipulation is going to take place, and that's where your high probability SMTs will occur. Now, could you have, so let's say CPI were to fall on a Wednesday, and then Monday and Tuesday were to have an SMT, and CPI continues at SMT. It'll be a large run, so it'll be kind of consolidative, choppy, but it still makes that SMT. And then Wednesday is whenever that distribution takes place, and then it follows all the way through. And you guys have probably seen this before if you've monitored CPI. Kind of choppy, creates an SMT, choppy leading up, and then boom, huge up movement, and then it just kind of stays there a little bit. So the liquidity and the volatility is already predetermined before the cycle even starts, as long as you have access to the economic calendar. And that's where this comes from. So if you're looking at a week and there's CPI there, and then there's also an 8:30 red news folder on top of it, that's going to have a lot more volatility compared to a day of the week, which would be a quarter, that doesn't have both of those. And you're probably saying, well, how does this correspond with the cycles? Because of how much volatility is in there. If you look at a CPI move on a 1 minute time frame, you're not going to see a 90-minute, well, you can sometimes beforehand, but you're not going to see a 90-minute cycle, microcycle SMT form because of CPI. You're going to see a very large cycle form from it. Does that make sense? And that's why elections are held once every 4 years. So that's why the quadrennial cycle has taken place. The index futures, typically the SMT doesn't follow through above the monthly time frame. And I hope I tried to make this clear with this right here. So certain news events have levels of volatility, and I tried my best to match the level of volatility with a cycle to look and gauge a high probability SMT. So CPI and NFP only happen once a month, so it'd be the monthly or weekly cycle, preferably the monthly. Red news folders happen once a week, so it's going to be the weekly or daily cycle. And on those news folders, that's where you look for the corresponding cycle to form the SMT. Yes. Typically on the index futures, you want to keep it at the monthly cycle or below. Why would DXY and indices move same direction after the quadrennial SMT? Right now, price is in a very manipulated state. And that's why I'm personally not trading until next week after CPI and everything gets settled and clear. Just because right now on this is still low probability conditions, because along with this up move that we've been seeing, this consolidative and this sharp up move that we had, dollar has moved the exact same, and that's not what you'd want to see. And I was bearish here. So here I was bearish. I expected this run to take place. This, since Trump, I feel like if Kamala would have won, then it would have just, and try not to be political, but typically in the past, Trump makes the markets do irrational things like what we've seen right here. And yes, SMT did kick this move off. But I wanted to see continuation of this move, but it just didn't happen. And whenever you're trying to speculate under conditions of elections and CPI and these high news events, it's normal for it to just become irrational. That's why it blows a lot of people's accounts. The CPI traders. So yes, DXY and indices moving at the same direction after the quadrennial SMT is because all the news and the things going on around the world, but everything should become correlated again soon. Everything is just kind of a mess right now in the real world. Could you share your process from locating a potential trade up until entry? So I really only trade the 15-minute time frame, which would be the daily cycle. So the night before, I'm already anticipating whether the candle I'm trading will be bullish or bearish. So if I'm looking for a bullish scenario or a bearish scenario, I'm already anticipating that. And then the night before, I journal some key levels. And then the morning of, I look for an SMT at the key levels. And if a PSP forms on top of that and some other extra confirmation, then boom, you have a setup. So everything is pre-planned and predetermined. You should never take a trade just randomly. All of the trades that I take personally, I envision them the night before or the week before. So you have bias. And another thing, don't marry a bias. If, say, you're bullish, but then the London session creates a bearish weekly SMT or daily SMT and price is following through, don't marry a bias. Trade what the chart is telling you. Sometimes you have to switch what you think is going to happen, and that just comes by means of experience. But generally speaking, all of your trades should be pre-planned and predetermined. So if you're bullish on the day, well, I should say if you're bullish the night before, then come into the morning, jot down some notes like, hey, if it does this, this, and this, then I can expect it to do this. And that's where you'll find your setups. Do you have a time-based estimation whenever ES, NASDAQ unsyncs and sync with Dow? Sometimes, from my experience, the Dow just kind of does its own thing, rocks to the beat of its own drum, and you can see the NASDAQ or ES follow shortly after, and then correct itself like we saw recently, or during specific news events like CPI, NFP, whatever. You'll see it happen. What are your thoughts on using premium discount of precision candles for relaxation as entries? Yeah, that is pretty much the foundation of why you're able to buy or sell the wick of a PSP. Because within the wick, there's a lower time frame, premium and discount array. Do you use NKD? No. Is bias dependent on SMT? Mainly. SMT has a expiration date, if that makes sense, from what I've seen. So you can typically tell when SMT will expire. And then a new one will form and then flip-flop back and forth. Let's say you see the monthly cycle SMT and the 4-hour candle that runs previous week low happened on Monday. The weekly cycle SMT should happen between Friday and Monday or Monday and Tuesday. So one shot, one kill. Formed on a Monday. Previous week low. Yes. In theory, yes. It should happen between, yeah, I mean, it could be both of them. But if a 4-hour, and that is another thing as well, which I'll clear up some ambiguity in the future whenever I release SMT Skip. SMT Skip will answer that question, and it's too much just to try to talk about it here because it's pretty in depth. Very, very few people actually know about it so far, and it works pretty well. But sometimes whenever you see that monthly SMT and then a 4-hour precision swing point, it won't even form the weekly, it'll just form the daily SMT, and then you'll be left wondering, like, okay, why did this happen? And then it's running without you. Bonds dropped today, should we expect NQ to follow? As of now, me personally, I'm waiting for CPI next week to clear things up. I'm not touching the markets for the rest of this week and the beginning of next. Real world events, geopolitically, are causing the markets to look the way they are, with the index futures not really making any sense. So sometimes you just have to let price do its thing. It will eventually become clear, though. So if you don't have a bias the day before, and we have a 8:30 red folder, the next morning you see a daily SMT on either daily or before. Yes, so if I don't have a bias, then I'll just look for normal protocol daily SMT. Daily SMT is in like 80-90% of my trades. Daily SMT is really important. Talk about precision swing levels. So precision levels. Are you talking about, elaborate more on that? And yes, V green on the daily cycle quarter. Really, the Q2 and Q3 90-minute cycle of the Q3 daily cycle are where your highest probability trades are going to form. That time window right there. For a lot of cycles. Can you talk more about precision levels? I discussed, I don't know if you were in here whenever we first started, but I pretty much gave an add-on to precision levels and a more in-depth explanation if you go through the charts and you dig through yourself. But precision swing points will be the beginning and the end of your precision levels. Mainly the beginning. Day knows it. That's how he's getting these crazy risk to reward, and that's the real shit. Without it, you just start risking too much. Even the content gets leaking. People cannot be around 80% accuracy without digging deep. Yeah, you don't need to get crazy risk to reward. You just need 3 R's consistently. And this is by Mark Douglas. Would you rather have, if you were to give people your money to trade, would you rather have or give your money to the trader that is a very good analyst, but not the best at keeping consistent? Or would you give your money to the trader that's insanely consistent, but just a mediocre analyst? So your risk to reward doesn't matter if you can't stay consistent with what you're trying to do. As long as you can consistently do something and you have statistics to back it up, and over the course of X amount of time you'll get a positive result, that's all that matters. Is there a sequence of thirds or halves with TPDs? Yes. What's the defining range of Q2? Is 7 to 8:30 more high probable on non-news days? So that's what ICT preaches. The thing is, though, that's only really going to be beneficial to you if you trade the sub 5-minute chart. And if you're not consistent on the 15-minute or the 5-minute, there's no point, in my opinion, trying to go down to that level of 1-minute time frame pre-market trading whenever volatility is low. Like, sure, you can identify some setups, but you want something that is consistent and repeats on a time schedule. More times than not, before 8:30 on a non-news day, it still looks pretty rough. And if you're not trading like a 1-minute or 15-second chart, there's not going to be that many entry techniques and not that much to do in there. Do you use currency futures for analysis? I just look at the USD pairs. I don't look at the futures chart. So, for example, Euro USD and pound dollar, and I don't think it really matters on the futures chart versus the CFD or Forex chart, exchange chart. Sorry. Use FX CM2, yes. Do you treat SSMT as a cycles open differently? For example, weekly SMT as a... Yes, so that's actually very good. So if and this is something I've noticed, if a SMT happens in Q1 on a lower time frame, so let's say Monday's trading has commenced already, and then Tuesday opens up. On Tuesday in Asia session, if we form like a weekly SMT, typically on Q3, which would be the New York session, price can reverse without reason and completely disregard that SMT that was formed in Q1 on the lower time frame. So it's just lower probability. It's 50-50 from what I've seen and what I've got written down. Best case scenario is that SMT forms during news. can you give us some tips to define bias? Just look for the higher time frame narrative, which is going to come from your higher time frame SMT, and or precision swing points and gaps. And if price follows through and closes above or below, then it is likely to continue. For example, we'll just look through this. And this is a less accurate way if you have literally nothing else, but this is like the easy way to determine bias. If this candle closed above this one, then you expect the next candle to continue. This candle closed above this one, then you expect the next candle to continue. This candle didn't close above this, so you'd expect bearishness. And then the next day you would have expected bearishness, but it wouldn't have worked out. This day, since this one closed above this one, you expect, that's like the bare bones. If you have nothing else, that's like your last resort right there. If the candle, if the bullish candle that you're trading, if they say the day closes above the previous daily candle, then you can expect the next one to continue higher. If it didn't close above, then you could expect a reversal. But typically, you want to have a higher time frame SMT, and you just want to play along with that. And if you've already traded higher, then you would expect, say, news were to drop on that same day. During the news, you want to see price drop inside of a gap, and then capitulate there for a second, form a PSP, and then continue on along that higher time frame. Wick above lower, wick below higher, yes. But that's like your last resort if you don't have anything else. Which at that point is kind of low probability. Could you show an example of monthly SMT, daily TPD, weekly cycle SMT, and how would you have entered without dropping too much loss? Yes. I'm glad you asked that. So, and don't take my word for this either. Go into your chart, look for yourself. This was a weekly SMT right here. Not a weekly, forgive me. Monthly SMT. From Q3 to Q4. This was a monthly SMT. And as you can see, and this candle right here was the TPD. And after this is done, go into the charts yourselves. Look, don't take my word for it, go in there and look yourself. So remember, if you've seen the videos, monthly SMT governed by a daily TPD will result in a weekly SMT if there's no predefined SMT. So this was that weekly SMT right here. Now, how could you have entered this trade? Order block, bam, trail down. You get 1, 2, sometimes 3 if you're lucky. This time you didn't get a third entry, but this was a fair value gap on a different asset. So you have your order block, your first stage, and then bam. So the way you could have entered was, once you have the monthly SMT and then the daily TPD was formed right here. Daily TPD forms, we form a weekly SMT, CSD, and then order block right here, entry. If you didn't take this, you could wait for a fair value gap, which this was a tiny fair value gap on NASDAQ. That price traded back towards. And earlier in the stream I said that you want to see price continue. If you already have a bias, you want to see during that news event you want to see price trade up into a gap, capitulate there for a second, and then continue downward. So there's another example of that. Daily TPD equal 4-hour market maker model. Learning. And this is just the beginning. Just the beginning. Was the SMT skip sequence present here? No. Alright, we're probably gonna, what time is it now? Probably gonna go for like another couple minutes here. If there is SMT but no PSP or intermarket PSP in the same time frame, how would you search for an entry? Look for new week opening gaps and gaps. And if there's no precision swing point, but it still shows a willingness to reverse, just trade the breaker. Have you talked about TVD when candle 1 is part of an FVG? What do you mean? Is it high probability to set up to skip hourly PSP if it does not show up and use 30-15 minute PSP if we have a weekly cycle SMT? Yes. Yes. If there's another lower time frame Kraken correlation supporting it as well, and that's where SMT skip comes in. So yes, this is on the right path to SMT skip, but it'd be too much to explain everything in one call. Could you show the example again? I couldn't follow, it went fast. Don't worry. This will be recorded. So you'll be able to go back through it and watch it as many times as you need to. And you can just look at the time on my trading view to gauge what time it's at in the video. Of course. Alright, I think that's going to conclude it. Next Wednesday, we'll get back to it, and I'm pretty sure next Wednesday. CP on a Wednesday or a Tuesday next week. I'm pretty sure it's on a Wednesday. Yeah. Do another one of these. So, same time next week. Get your questions together. If anything happens before then during the week and you want to talk about it, bring it up in chat. More than welcome to. It was great seeing all of you, talking to all of you again. And any homework, it was presented at the beginning of the session. Something for you guys to go study and go through the charts. So yeah, I will speak with you all next Wednesday. Have a good night, good day, good evening, wherever you are.